Dollar Swiss, same thing. It's got a lot of momentum to continue going higher, but do you want to be taking trades, as I call them, chasing these moves? And I personally just don't like taking those kind of risks. So unless we get the kind of retracements we're looking for, it's tough to jump in on these. And we'll just go back to, I know I repeat this a lot, but it's part of just listening in and just getting it in that subconscious and understanding that there are days when we've got these kind of markets and these conditions, they don't play well to what we like to do. And so when that happens, we just need to recognize it, be patient, and wait for another opportunity, whether it's another session or another day. Understand that these are not the conditions we like to trade, because they don't work well with our methodology. And the only thing that you have that you could do is the chasing part, and we don't like doing that. And as I've said, it's very difficult for you to be shifting from being a contrarian trader, where you're always waiting for the price to move against the overall price direction the market's moving. And in this case, it's not that so much we're contrarians, we're more about taking the retracement trades, so that way we have safer entries, and that's really what we like to trade. If we start taking trades where we're following the move, then at least at this point in time, you're going to start finding that it's tough to figure out on an average, what are you doing? Am I going to be chasing the trade, or am I going to be waiting for retracements? And you fall into that area where you get really confused and not knowing what kind of trader you are. So we're very defined in what we do, and we're always looking for the two types of trades. Our retracement trades to go in the direction of the trend, and they need to be as we call them, appetizer trades, where the retracement falls in an area that we feel comfortable is far enough to where we can take a chance to put on our position, or the trade trends and we know it's trend a little bit too far, and it'll hit certain areas of support or resistance, and then couple that with either big figure and Fibonacci levels and different things like that, that we can go ahead and say, all right, maybe this is the area where the market is going to take a breather, and in that breather we're going to catch some of those points as we let it ride back the other way. So again, very defined in what we do. Understand that, so that when you have markets like this, if you don't trade them, it's because you understand that it's just not the kind of market that that favors what we like to do. And we're going to have times like this, days like this. Unfortunately, sometimes in light volume markets, we might have more of these days than we care to. It happens. We'll go back to last year, where for the first time I found myself going through sometimes 3 days, consecutive 3 days of not a lot going on. And quite honestly, since I've been in this business, I've never found myself where I'll go for 3 days where I don't really see volume in a market that really gives us opportunities. In fact, I saw as much as a week. We would put on some trades because we were doing some of the active stuff, but for passive trades, I think there was as much as a week where not a lot that would develop into passive entries. So we just have to be patient. It's gonna pick up. I mean, we're in the beginning of the year, and I can assure you, a lot of these big fund managers are going to get back busy, and they're going to start moving these markets because they have to make money. And when they do, we'll be ready. We'll be ready. So